and you're thinking to yourself, where should I invest my first £1,000? Well, Runke is here to tell you where exactly you should invest your first £1,000, where I would invest my first £1,000 if I were in your shoes. So stay with me. Hello friends, welcome back to my channel, The Bulletproof Life. My name is Runke Odeunmi and I'm delighted to have you here. I hope you're having a good week so far. Today I'm going to be telling you how to invest your first £1,000. Yes, so you've paid off all your debts, at least the high interest ones. You've put away something in your emergency fund, and now you're ready to invest your first £1,000. And you're thinking to yourself, where should I invest my first £1,000? Well, Runke is here to tell you where exactly you should invest your first £1,000, where I would invest my first £1,000 if I were in your shoes. So stay with me. So, welcome back. If you've subscribed to my channel, I thank you very much. If you've liked this video because you know you're going to enjoy it, thank you very much for doing that. This sound is for you. Awesome. So, where should you invest your first £1,000? You've paid off your debt, you've put away 3 to 6 months of living income in your emergency fund, and now you're ready to invest. Please be aware that this is my personal opinion. It's not financial advice. It's just what I think I would do if I was in your shoes and I had this £1,000 that needed investing. The first thing I would do is to identify my investment goal. Why do I want to invest this £1,000? What do I want to achieve with this £1,000? Am I looking for an extra income? Am I looking to get something back in terms of income from this £1,000? Or am I looking to grow wealth for the future? Is it the beginning of my investing journey? Am I going to be adding more to it so that I can grow wealth? Is this something I want to do for my pension? Am I thinking of my old age already? Are you thinking of when you're 70 and you're not working anymore, how much you're going to have to spend? So the first thing I would do in your shoes is to identify my investment goal. Why am I investing now? The second thing I would do is to know my risk appetite. Am I somebody who likes low risk investments? This £1,000, I don't want to risk it at all. I don't want anything to happen to it. If it reduces in value, which can happen with investments, would I be crying and getting out my Bible and praying and asking God to come down and solve all my problems because, hey, I'm about to die? Is that me? Am I a low risk appetite person? Or am I a medium risk appetite person? You know, if I lose a little bit of this £1,000, it's not the end of the world, but I'd rather not lose everything. I would like to make something on it. And if it's not too much, that's okay. It doesn't have to be a lot of returns, but I'd like a decent return on it. You know, I'm somewhere in the middle. I'm not too low risk. I'm not too high risk. Or am I a high risk person? Am I someone that believes, well, it comes, it goes. If I lose it, I lose it. I'll make another one the same way I made this one. And if I'm going to invest it, I really need high returns. I need this money to work for me and come back with aggression and all of that. What is my risk appetite? That's the second thing you need to identify. So once you know your investment goal, and then you know your risk appetite, it's time for us to invest this first £1,000. So let's start off by saying your investment goal is to grow wealth and you're somebody with a low risk appetite. I would put 70% of this money into bonds and 30% of it into funds. Now, the 70% I'm putting into funds, which is £700, I would put 500 of that into government bonds and put the remaining 200 into corporate bonds. Now, government bonds in the UK are called gilts, and it's basically when you're loaning money out to the UK government. It's considered to be very safe investment. You're not likely to lose your money, and you can buy gilts or government bonds on a lot of investment platforms that operate in the UK, like Agris Lansdowne, AJ Bell You Invest, Vanguard, and so on and so forth. And then I would put £200 into corporate bonds. So 500 into government bonds, £200 into corporate bonds, and I'm sorted on that side. And then for the remaining £300, I will put this into exchange traded funds. Exchange traded funds are funds that are traded on the stock exchange, which allow you to invest in a wide variety of stocks, and in so doing, you spread your risk. So I would go for an exchange traded fund that is tracking a particular index, so an index fund. So I will go for an exchange traded fund that is tracking, say, the FTSE 100, which is an index in the UK that follows the top 100 companies in the UK, operating in the UK. Or I would go for an exchange traded fund that is tracking the S&P 500, which is an index that tracks the top 500 companies in the USA. So for a low risk appetite person who is looking to grow wealth, the way I would invest my first £1,000 is to put 700 into bonds and £300 into exchange traded funds. Now, let's say I'm somebody with a medium risk appetite also looking to grow wealth. What I would do is put 500 of that money into bonds and 500 of that money into funds. Now, in putting my money into funds, I would not put everything into exchange traded funds. I would put some of it into mutual funds. Now, mutual funds are not traded on the stock exchange, but there are also funds like the exchange traded funds that allows you to invest across different companies. So I would put 200 into mutual funds and 300 into exchange traded funds out of the 500 which I want to put into funds. And then for the 500 I want to put into bonds, I would put 300 into corporate bonds and I will put 200 into the government bonds. And that is how I would invest my £1,000 if I was somebody with a medium risk appetite who is looking to grow wealth. Now, if I was somebody with a high risk appetite looking to grow wealth, I would put 80% of my money into funds and I would put 20% of my money into bonds. Now, for the 80% I'm putting into funds, I would put £600 into mutual funds and I would put £200 into exchange traded funds, and then I would put the last £200 into corporate bonds. That is how I would split my money if I was investing as somebody with a high risk appetite. Now, if I was somebody who was investing towards a pension, I would put my £1,000 into investment via my self-invested personal pension account. So that £1,000 would no longer be accessible to me. I will not be able to withdraw it. If I sold the investment, the money will still remain in my pension account, because what this does is that it prevents me from spending my pension. So if you are somebody who is looking to invest your £1,000 into a paper investment, but you are doing it towards your old age, you are doing it to prepare for your pension years, then the best account to do it through in the UK is the self-invested personal pension account called the SIPP. So I would invest my £1,000 using my SIPP account, and I would still follow the theory I just put forward about low risk appetite, medium risk appetite, and high risk appetite. Now you're probably wondering, Ronke hasn't put any money directly into stocks. She's put all of our money into funds and not directly buying individual companies. Now I haven't bought individual companies because £1,000 is not a lot of money, and if I had to put that money into individual companies, one or two companies will simply wipe away all of my money. For example, Amazon shares is going for over $3,000. Tesla shares is going for over $600. So all of these companies, if I try to invest in them with my £1,000, is either I wouldn't be able to buy any shares at all, or I will end up with just 1 unit or 2 units of shares. So this is why I have not bothered to invest in stocks and shares directly at all, especially because if I do it through funds, I'm able to spread myself across different stocks and shares and reduce my risk exposure. And this is why I have stuck with funds and bonds as much as possible. I hope this video has given you an insight into how you can invest £1,000. It doesn't even have to be your first £1,000. It could just be the £1,000 that you have right now. That is how you can invest the £1,000. Now, if you want my cheat sheet of funds and bonds that I really like to invest in, that I've invested in the past and they've proven great, they've performed well, then you need to be attending my investing masterclass. If you want to know more about investing generally and have access to my investing cheat sheet, what I invest in, what I buy, what exact funds and bonds I'm putting money into, then you need to get into my next investing masterclass. The next one is happening in the first week of August. I've got another one in the first week of October, and I've got another one in the first week of December. So I've still got 3 investing masterclasses you can attend this year. So what are you waiting for? Get in touch with me, send me an email, drop me a message in the comment section to let me know you want to attend my investing masterclass, and let's pick up the conversation from there. If you haven't subscribed to my channel, I don't know what you're waiting for, darling. Please subscribe to my channel. Press the red button on your right. Don't forget to press the bell. A lot of you are subscribed, but you haven't switched on the bell, so you're not getting notifications from my videos. So please switch on the bell so you can get notifications from my videos when they drop. They drop on Mondays and Thursdays, and you can watch them and connect with me and have a chat with me and let me know how you're doing on your journey to financial freedom. It's been a delight hanging out with you as usual. I love hanging out with you guys, and until my next video, you take care of yourself and keep living that bulletproof life. Bye bye.